Mr. Vijay Thadani, co-founder NIIT Group and Vice Chairman NIIT Limited. Hi, good morning and welcome to the show. First up, consumer revenue growth. If we look at 27% up year on year, we can see a significant number over year ahead of enterprise. Now, how much of this growth is actually driven by one-off BFSI hiring recovery versus structural demand for AI and technology programs? Also, for the investors' perspective, should investors expect consumers to continue growing faster than enterprise over the next few quarters?
So first of all, again, I think you have two questions. So the first question was on consumer. And I think the consumer delivery is also coming from the strong growth that we are seeing in the university segment. We added a new member in our family last year, which was NIIT, and I think they've done exceptionally well last year, and they are on a strong growth track, that team. On the other hand, the demand for AI-led courses, especially agentic AI and other AI fluency programs, they are also gaining momentum. You're right, BFSI hiring has picked up, and BFSI hiring is contributing part of that growth. Last year, BFSI hiring was at a negative, and therefore, to that extent, the delta is higher and in the visibility that we can see right now. But yes, BFSI growth is back, but not yet at the levels at which we are used to.
Right, sir. Meryl D'Souza also joining in. I'm seeing AI contributes around 9% of your revenues today. What milestones should investors track over the next 12 to 18 months in order to assess whether AI can become a meaningful growth engine for you?
Yes, I think the indicator that we have shared, I think, is a good indicator to share. The second will be use cases. I think we have some very interesting use cases like using an AI coach for helping wealth management professionals. AI coach, for example, in auto dealerships or auto sales, in making sure that with the wide range of vehicles that are available, how do salesmen become proficient in offering the right model to the right customer. So these are some use cases, and we can talk about use cases, and from there you could get an indication of what are the growth possibilities. But the two examples I gave you are definitely two of some of them which are gaining momentum. Forward deployed engineers in GSIs, for example, is a very high demand area, but also high specialization when it comes to building the training programs for that. I think NIIT is very well suited and placed there, given our vast experience, as well as the lead we have in building AI-led programs. So I think these are some of the indicators which will contribute to the thought process of how AI is affecting our business.
Right. Let's also talk about the order intake, which remains healthy despite the challenging environment. But, if we have to ask you to comment on the quality of these orders, what would that be? Also, what percentage of new orders are AI-led compared to a year ago?
Okay. I won't have the breakup, but a large number of new orders are now AI-led. And when I say AI-led, I refer to AI fluency programs, very domain-specific programs, like I gave you examples of auto, I gave you examples of banking, I gave you examples of GSIs. Similarly, GCCs have very domain-specific requirements. I think those are the programs that are gaining traction. And the fact that we are able to demonstrate outcomes, which is an improved capability, improved performance, I think gives us a stronger position in the market.
All right, understood. Operating expenses were also seen growing only 7% against the 14% revenue growth, which is resulting in significant operating leverage for you. Now, as revenue continues to grow, what is the sustainable EBITDA margin that your company can achieve over the next 2 to 3 years, which is assuming current investments are normal?
See, there are some parts of our business which are at near steady state margins, which will be between 15 to 18%. And there are others in which we are in an investment cycle, and then there are those which are affected by the environment. Well, all the businesses are affected by the environment, but in some, the AI penetration is actually helping us overcome that the environment effect. So the steady state margin that our business should be at is 15 to 18%. There are some parts of the business which are already doing that. There are businesses which actually do better than that as well, and that will get demonstrated. And to that extent, I think you should see an improving ratio between revenue and expenses, which means expenses are not likely to grow as fast as revenues. And we should see a steady improvement as we go forward. Of course, this has to be balanced by the investments that we are making, for example, in AI-led platform and product development, as well as go-to-market initiatives. But I think in the overall sense, our effort is to work on the margin also as we go forward.
All right, Mr. Thadani, thank you so much for joining us today and answering all the questions. So that was the management of NIIT, but then let's